This is the art of startup war. And my name is Brian Mac Mahon, your host and sensei. Here is what we know. 98% of startups will fail every single day, and mostly due to reasons outside your control. The Expert Dojo Startup Accelerator, we look to even up the playing field by sitting down with the greatest minds in startup investment right here in our studio in Silicon Beach, where we look to shine a light on your path to success. Now, our guests each week have invested millions of dollars into startups and are the most respected investors in the world. Now, they share all they know with you, the listener. So join us on Tuesday mornings at 10 o'clock Pacific Standard Time, starting off your week winning the war against startup failure. Hello, we're back. And we're back today talking about, this is different, right? Normally, either I bring in a investor who is massively active in the community, who's investing money into early stage startups, or it's a new investor who kind of wants to. Obviously, corporate venture partners, we love those guys as well. And we're even dabbling with a little bit of crypto and trying to find out how can we get involved in investment there too. Today is different. And it is different because I am talking to my friend and colleague, John, who is our investment strategist here at Expert Dojo. Now, why is this really important? Well, every single day and every morning and every night, the only thing John is doing is reaching out to the investment community on behalf of startups and on behalf of our cohort here at the dojo to try and see who can we get investment for? How do we get them investment? How much investment can we get for them? And everything. So who better to have an honest conversation with other than John about what the hell should startups do? Because everybody here has got one thing that they're trying to do. They're trying to get access to investors. They're trying to raise money. They're trying to scale their business. And you reach out to how many investors every day?
Dozens, at least. I mean, anyone who's applicable to the startups we're working with. So
at least, right?
Yeah.
I've seen you reach out to, I've seen you have 100 investor days, and I've seen you have 2 or 3 investor days when you're going after them. Now, a couple of things about today. We're probably not going to go through names. Like, we have one of our companies right now, they do logistical support for buildings, so predictive maintenance for buildings, but they're in the middle of their raise. They've almost finished it. So we won't say their name, but what we will say is that they got around 20 investors. They've got 20 investors so far, 18 to 20 investors for over, $1.1 million?
I believe they're about 1.3 right now, so we're looking to
1.3.
close the last little bit to close the round out because they're looking for 1.5. So should be done hopefully in the next month or so.
So let's kick in there. We've worked together for 4 or 5 years?
Somewhere around there.
You poor bastard.
Yeah,
I
tough.
know. It's been tough, right?
Yeah.
But now you're leading all of our investment. Like any of our startups who come in who are looking for investment, the only person who's driving their investment success is you. Mm-hmm. It's a big responsibility.
Yeah, it's tough. I mean, we get to see a lot of cool startups every day, though. They're always trying to find something else. It's always different routes we go to for investment. It's never the same deal for any 2 companies. So always get to see some new stuff, reach out to some new investors, and just explore the new companies as deep as we can.
So let's just go back to our startup, which is at the 1.3 million, 20 investors. So it was not easy, right? Because it's not just about reaching out to investors. Because what I want people to get from today, I want them to get a little bit into the inside of what makes a more investable startup as opposed to a least investable. And the really interesting thing about this particular startup that I'm talking about is they went through this wonderful transition of being a startup where it was hard to get investment at the beginning, and then it became really easy. Same CEO, same company, same value proposition. Can we just talk a little bit about what was it at the end that made them so easy for you to find I think you found like 10 of those investors for them. Like, what made it so easy to get there?
Well, theirs was an interesting one because they didn't really change the investment perspective, but they kept building the company as they were going. So they didn't just stop building it and go, we need money. How are we going to operate if we don't do money? So they found ways to get around that without the money there. And so they were just building and building and building. They knew if they're going to build something great, investors would eventually line up for it. So it just took them a lot of time. I know they were really struggling to get the money down there. They were waiting and waiting and waiting. And then one investor saw their vision, saw what they were doing, and it clicked. And the first couple $100,000 came in, and then it all just started coming in really quickly after that.
And that was an investor you introduced them to, right?
That was an investor I introduced them to.
It was a nice little $200,000. Thank you very much.
Yeah, I mean, as soon as that first check came in, we just every week we had a new check coming in.
Because we're using using the traction to do the urgency. I love what you said right at the beginning of this particular segment with this company, which is they didn't stop growing their business to get investment. We see it so often when startups allocate 90% of their time just to go after investment. It's a 3-6 month period. The company fades away. The further you go into your investment conversations, the fewer good things that are happening in the company, and it becomes a nightmare. While this company, let's call it Jimmy. His name is not Jimmy. It's hidden for I don't know purposes. But let's call him Jimmy. What Jimmy did was he spent all of his time listening to the feedback from the investors. No, we're not no for him. Actually, 6 or 7 of the no's were yeses 3 months later. Because he listened to the feedback that he was getting. And then as he was hearing and changing the things that needed to be changed, the investors saw that, and then they moved their no's to a maybe, and they moved their maybes to a yes.
Yeah, I mean, I think that's the case with most people is they just want to see where you're going to go. They want, especially in the early stage, pre-seed and seed levels, they want to see what's going to happen more than anything. They want to know that even without just their capital infusion, that you can scale this still, that you can still build something, that you're on the right track without their money or not. They just want to get on board once you need it to really scale that side of it. So as you can prove the concept as much as you can without the capital coming in, it's very easy to see the investors as a successful company coming along. Sorry, if that made sense.
And there are a lot of investors, right, John? Like there's not. I know that sometimes we look at seed investment and we realize that it's hard. That seed has dropped. There's less investment in seed today. I was chatting to my friend Alon over at Wavemaker, and he says, it's surprising how few real active angels there are in an area. But actually, there's a lot of people who can potentially invest in seed. I mean, how big is our garden of investors that we can reach out to? And I don't mean just us at Expert Dojo. I mean, as a startup, if we have absolute clarity as to the investors to go after, what's our potential?
And it's a huge network. Every day I see new funds popping up I've never heard of, and I deal with funds constantly. Obviously, you have your big ones that are going to be in San Francisco, New York, LA, wherever. But then there's just new people coming in who want to get involved in the community. Maybe it's somebody who's done real estate their whole life. They have a substantial amount of capital to invest. They don't really know how to get started. They're just trying to find a new company. We see people like that get investment all the time from people like that. So the companies are always exploring new avenues to find investment, and we're always looking for new people to get involved as well. It really just depends how early you want to get involved. So most VCs will start Series A and B because it's a better success rate.
Yeah.
But obviously you get better returns in the earlier stages. So working with the investors and finding what they're interested in is really the most difficult part, because you want to see what's going to work. Do you want to do the higher risk or the higher reward, or do you want to play it safe, for instance?
And so let's say I'm another Jimmy. I'm really early stage. I have not built my product yet, but I've almost built it. It's kind of ready. People can see the vision. I'm a good entrepreneur. I haven't exited a business before, so I haven't made a couple of $100 million from coming through a business, but I'm a really smart guy and I've got an okay team. How hard is it for me to raise investment?
I mean, everything, it just depends. I mean, you could get lucky in the first night out and meet somebody at a bar and they love your company and they're like, yeah, sure, I'll invest couple $100,000 and no problem. Or you could have a great team and you just can't find the right person to do this. So that's really where we come in with this in Expert Dojo, is helping them find the right investors for the product. And there's really no easy way to do it, though, I would say. It's always a tough road. You have to meet a lot of people. You got to shake a lot of hands, get a lot of introductions out there. You're finding 100 people just to get the one investor that's perfect for you. And it's usually never an easy route. I mean, sometimes there's anomalies, but very rarely. Even the best companies we deal with, which we see some awesome companies in here who still struggle day to day just to find little checks of maybe $100,000 or so. Yeah. And even some great companies who are doing really well, who are already making $4 or $5 million a year in revenue, just getting them a check for like a Series A round is really tough sometimes. And sometimes it comes really easy. It's like we're working with one right now who's an acquisition who we introduced him to maybe 5 investors, and it looks like they might want to go through already.
We got like a cash acquisition potentially for $22 million, right?
Yeah, and then we have a company.
But actually, that speaks to a point. So I always really enjoy watching you as your kind of your mind starts to work when you're thinking about which investors to go after something. My approach can sometimes be a scattergun approach. It's kind of a historic thing for me. I think, just tell everyone and then good things will happen. But your approach is much more targeted, right? It's very specifically, I would say, based on probability, based on past record, kind of machine learning in a person. So you won't go for 50 people to go after. You'll specifically choose 4 or 5 first, and then you'll get feedback from those 4 or 5, and then you'll see how it fits, and then you'll go in deeper. Is that pretty accurate, or you want to add anything to it?
Yeah, I mean, I don't like to ever reach out to somebody that's not a good fit for something. So if we're dealing with a company who deals with cybersecurity and this company, the VC only does consumer products, I'm probably not going to reach out to them because I don't want to waste their time. I don't want to solely my reputation of not. I want to make sure they're getting good lead flow from me. I want to make sure the best companies are being presented to them for what they do. Because most VCs won't go outside of what they do. What they know is what they want to do. Yeah. And if they won't really expand beyond that, even if they see a company that's really great. They might say, hey, I know somebody who is interested in that. Then they do that introduction. But that's usually a different approach. It's not usually like a call them and say, hey, this is a company we're going to deal with. What do you think? That would be more of an in-person introduction than anything, I'd say. But yeah, I like to focus on, say, 10 or 15 companies at one time, see who's a good fit, talk to them, see what they like about it, what they don't like, address it with the company too. So say, if I keep getting the same results, like we want to see this happening, I usually consult with the company and say, hey, this is the feedback we're getting. What can we do to change that? How can we make this better so that the investors are much more interested in it in the future?
Yeah. So it is it's not even just about you, right, John? It's also about if I'm a startup, I don't want to be remembered by investors as being some schmuck who's just wasting their time sending out emails to everyone because nobody's going to reply. Like, I want them to remember me as an entrepreneur who's really smart, who values their time, values my time, and I'm writing to them for a very specific reason based on research that I've done on that VC or I've done on that angel, which means there's a higher probability for them to have a good deal and for me to get a good investor.
Mm-hmm. Yeah, I always like to do a little research on the investor too. So if the investor writes articles on Medium or something, you want to find that and say, hey, I saw you wrote this. Our company kind of does something like this. What do you think of it? And then just relate to what they're doing in some capacity because, I mean, even me, so my LinkedIn says investment manager for Expert Dojo. I still get about 10 or 15 messages a day just asking me for an investment. So I know that they're just spamming every investor they get on LinkedIn. And it's just really they're throwing everything against the wall and seeing what sticks as opposed to finding the right investor for their company and then going after them with a very specific message for that person. And that is always what's going to be a better result, is getting that specific message out and finding the right investor for your company. Because anyone can press send 5,000 times on LinkedIn or on an email, but finding the right person, doing your right research and seeing the companies who work, that is a lot harder to do and it takes a lot more time, but it gets better results usually.
Yeah, and by the way, so all of you who are listening, if you've just tuned in, you are listening to Jonathan Wallace, who's our investment manager, head of investment here at Expert Dojo. He's the guy who reaches out to all of the investors on behalf of all of our startups. So we're giving you the secrets of every single thing that goes through our mind when we're trying to get the best for the people in the cohort, so life can be a little bit easier for you as well. So John, what are you seeing? You also have some nice deals. I always loved that deal that you're doing with the cybersecurity company. You've pushed it for a really good valuation, like $50-60 million. You've got 3-4 companies who are lined up right now. Nothing's closed, but it's very close. Again, for a company like that, you knew it, right? Is there a formula when you look at these companies? Because I hear it with you. You actually say it to me. When I give you a company, I'll come in, I'll say, hey, John, what do you think of this? You go, I love it. Make sure we get them as a part of the dojo. Or you'll say, that's going to be tough. What's going through your mind when you're deciding between either I like that, we're going to get it invested, we're going to move it forward, it's going to exit, or that, no?
Mm-hmm. Yeah, I mean, obviously the first impression you get is just the founder. You want to see what they're doing, what kind of personality they have. I love when somebody's just going to go after it. When you get introduce an investor, they're going to be emailing them every day saying, hey, when are we setting this meeting up? When are we going to do this? Really fighting for it. Like, I know we have a new company we're dealing with right now. And
did you love Chelsea?
She's just like a fighter. And everything I send her, she's going to go after it that day. I don't have to call her up and go, hey, did you remember to respond to these guys? Because
she's a beast.
She's already ahead of me on that. She's going to respond to it. Whereas I have some companies who they need this investment. I send them an investor, and the investor never hears back from them.
Yeah.
Which obviously doesn't make me look good, doesn't make them look good. But I still have to follow them like, hey, why was this investor not talked to? You need investment, so this should be a priority for you in some capacity.
And it's crazy because, you know, and this is not, I know many of you listening will say, well, this doesn't apply to me at all because of course I follow up. We're talking about real follow-up, not just you answer one phone call and you call them back. We're talking about actually scheduling a proper plan of action so you're staying engaged with these people for the duration of the 6-9 months that it may take to get the finance through. Not that you just call them back 1 or 2 times. Own these investors. This is the most important thing that you will do in this period of time. And if you're going to do it, make it work, right?
Mm-hmm. Yeah, I mean, it's always good. Even if someone said no to you right away, you always have a note that like, hey, in 6 months, I'm following up with them. I'm going to tell them where I'm at now, show them the progression I've made, and so that maybe they're interested then. Because most VCs are never just going to flat out say, no, never interested in this, I mean, if they're in your industry. But they'll want to see where you're progressing to. They want to see that you're actually making strides to make the company better. So it's never just a flat no for most people. It's usually, hey, we like the idea in some capacity if it's the real company. They want to see that people actually want to use it. They want to see your user growth, and they just want to see that it's going to be successful in the future with their money just to make that happen faster is the big thing.
I like that. So, okay, so first thing I've got is be a Chelsea. Like, be a beast, right? Yeah. Second thing, what else are those buttons, which are just huge green buttons with founders that you think, yeah, this is going to be a good one to get investment in?
I mean, I always like to see things that are different. Something I haven't seen common because I mean, you and I see these companies every day, and we've definitely seen companies where we've heard the idea several times, just pitched in different ways.
Right.
You want to see new innovation that's not being done in the same way by anybody. You want to see something that's potentially scalable, because there's a lot of companies that are good ideas, but there's really no market for it that's going to be easily addressed. Their cost of acquisition is going to be really high, or they're just not going to be able to do it without a ton of money infused in the beginning of it. So I like to think, just your go-to-market strategies, how is it going to really be successful? Because if that's not there and they haven't really thought about it, there's probably some other red flags down there as well. And so that's always the first few things I like to think about, just as they're presenting to me the first time. And just see how we can really help them. If I'm going to be even able to raise investment, because an investor is going to see that stuff as soon as they talk to them. They're going to look through all that stuff. They're going to want to see their financials, all that information. And if they see any red flags, they see the big competitors in the market, they're probably going to shy away from it until you have a substantial amount of success.
Yeah. So make it different. It is hard for all of us to be different, though. Mm-hmm. I mean, sometimes good ideas which aren't different can get through. Mm-hmm. So let's say it's not the most incredible, innovative idea in the entire world. Let's say it's just really good. Mm-hmm. Let's say we have a really good founder. We got a beast of a founder who's just going to go after everything. And they know it's not just, if the founder's like that with investment, they're going to be like that with business development as well. What else do you like? Do the decks matter? Like when we look at the deck, I used to think at the start the decks were everything. I got to say, there's a part of me right now where I see amazing people and companies getting funded with terrible decks, and I see a lot of phenomenal decks that investors just don't go for because they don't like the fundamentals.
Yeah, I mean, we see it at our investor festival all the time. We always have the person who just wows everybody with their pitch, but then when they get down to it, it's just not quite good enough to get investment for. I mean, obviously it plays a part in it a little bit. I mean, the investors are going to look at it. They want to see that all your information's there. But if you have the right statistics, I mean, I measure all my emails. I make sure all my stuff's being read, how much of it's being read, where everyone's doing, where all my downfalls are and things like that. So I always see the best success with, this is what we're doing, this is what we want to do, this is what we've done already. So just, we're making $200,000 a month right now, we're projecting this much, and we've got this many users, and we're only going to scale from there. And I always see better success with numbers and like a message like that.
I like that. And then living by your messages. I know one of the things that you do at the startups here is you milestone everyone. So you put them into the program, you look at the milestones going forward, you're then very transparent with the companies that you're working with, the investors that you work with, on what those milestones look like. Do you think the investors really care about? I mean, do they care to a massive extent? Or I think that they care, but how important is it?
I think it's really important. They want to see that you're on the right track more than anything, because usually they don't know you. I mean, unless you can prove you've already done these companies, which makes investment a lot easier. You've already exited a few times. Unless you can do that, they don't really know you. They don't know what you're going to do. You might be really smart, but you've never built this and you don't know how to do it. They want to see that you're on the right track to do it. And I think that's the most important part with that, especially with the milestoning, is just seeing that you're on the right track, that you're doing what you said you're going to do. If you're hitting all your goals, you're obviously doing something right. But if you're not hitting those goals, you probably need to change something in your approach to it. So it's really important for investors to see that.
I like that. So use the numbers, make sure the numbers. So we have the pitch deck. Important, not vital that it's shiny. We don't care if it's shiny, but vital that the numbers tie directly into where the company is going to go from the future. We got milestoning, which is really important because we got to make sure that the company is planning for what's going to come, because that's the only way the investor's going to know what's happening. Business plan, right? You have to have a business plan if you're going to be speaking to investors, right?
I mean, past pre-seed, definitely. I mean, most investors want to see it at seed, Series A for sure.
Yeah. And that business plan should be, 15, 25 pages. You should have a projected profit and loss in there. You should make sure that you have your business value proposition, competitors, but just the usual stuff, right, John? Again, doesn't need to be crazy, but it does need to show a roadmap from today to where you're going to take the company to.
Yeah, exactly. It doesn't have to be that expensive. I mean, you can just have the basic information on there, what you want to do, who else is trying to do what you're doing, and where you're at now is the most important things, I'd say.
I like that you use those words. Don't spend 10, 15 grand on a business plan. Just don't do it. I don't care who's building your business plan. It's too much money to spend.
No, you can find outlines online too that just have the basic overview of what to write in.
I'm going to say don't even spend 5 grand. If somebody comes in here, and this is no disrespect to anyone who does business plans or the work that you do, I believe for a large company or a medium-sized company, you absolutely need to spend crap in, crap out. You need to spend the right amount of money to get the right product. But we're not large, medium-sized companies. We are early stage startups. And that means that I'm going to assume you are not going to do one terribly sad story that I heard about one of our startups who spent $15,000 on a business plan. I'll assume that $10,000, $15,000 is miles out the window. Normally what happens is people are looking at like $5,000 and saying, should I spend it? John brings up a really important point. There are kind of 3 parts to the business plan. The first part is your vision. You can't outsource that. You have to do that yourself. You should actually write out that entire part of it so you can look at what your progression looks like, what your product looks like, and how it compares to the competition. The second part of it, you can outsource, or at least get an outside perspective, which is somebody else balancing your biased opinion about how awesome your product is by incorporating the SWOT analysis, the strengths, the weaknesses, the opportunities, and the threats from within the market and within your competition. And then the final part of it you should not do, and they are your projections. But you should do them with an accountant or with a CPA or with someone who knows. Mm-hmm. Whole cost, maybe $1,000, right?
Yeah, somewhere around there.
Yeah, $1,000, $1,500. If you did that for a nice 15 to 25 page business plan and you had spent, but you must have spent at least 8 hours yourself. If you haven't spent 8 hours working on it, then shame on you. Because if you outsource your business plan, you're outsourcing your business and where the business is going to go to. What else do they need, John? We got the presentation, which is like your first date. We got the business plan, which is that very important dinner with the parents. What's in the middle that's going to convince the investors, or what else should they have prepared?
I mean, I always like you said with the business plan, it's a lot of connection things in there too, so you can find the right people who can help you with that kind of thing. Yeah. I mean, a lot of that with the investors is if someone's referring you to these investors, it's always a better thing for you. They want to see that other people are appreciating that too, and they see that where you're going, and they always like referrals. I get so much better responses when it's a referral like that too. You always want to have someone like, this is great. take a look at this. This is great for you. And I mean, I get pretty good response rates in my emails and everything too, but it always helps when you have somebody else there who's referring it. A lot of these companies want to see this come from 2 or 3 people before they even look at it. They want to hear your name out there a couple times. They want to know that you're out there pushing your company and that everyone's hearing about this thing. It's the next big company coming in. I've met with investors here, like, I won't even look at a company unless I've heard about it from 3 other people. And it just happens all the time. So it's always be good to be putting your name out there, meeting with as many investors as you can who are in your space, like we said earlier, and just finding the right people for that too.
That's really powerful. So even if I have, and I know I sound surprised, I'm not surprised. I want to just do it for effect because I think it's but it's huge, because you would think if I have a great idea, a great plan, a great deck, I approach the right people within the right sector, of course they're going to invest in me. No, because the challenge that you all have out there is that there's hardly any investors and there's lots of people looking for investment. So a lot will work on the basis that if they get it from a trusted source, then they trust to actually read it in the first place. A lot of them are hard to get read, even if they don't actually get it through from the right people. So I love that. So you're saying go to like the accountancy firms. Maybe it's an early stage financial services type firm. Maybe it's another firm out there who are just in the venture world. Go to your attorney friends. Go to your recruitment friends. Go to fellow startups. Actually, I want to focus on fellow startups because I think what you've achieved here at the dojo with all of the startups actually sharing their investor contacts and introducing each other to each other is also really big as well.
Mm-hmm. Yeah, I mean, it's great to see a lot of our startups helping each other out too. I mean, we had the real estate company we're working with he introduced another one of our companies to one of his angel investors. That angel investor put some money in the other company. So
and look at Go Snow. Sean is continually giving access to just great investors that he feels would be just really good for other people.
Yeah, I mean, it's all about establishing a community with people like that too. You're finding good people in the same space as you who want to help you out too. I mean, that's a big thing we've built on here, just finding the right investors for every company. So we have a big network. Everyone knows people that not all of us are going to know. So finding the right investors, we've been introduced to investors by startups we've worked with who it wasn't a good fit for them, but they introduced us to them, and now we have a great relationship with them. They invested in startups we work with now. So it's just building that whole network of people as well.
Yeah, so it's tremendously difficult if you're just trying to do this alone. If you're a lone startup in a market, maybe you had a job for 10 or 15 years and you got a little bit of money now, you have this great idea which is going to change the world, and you think to yourself, my idea is enough. I'm going to find an investor. They're going to love my product. It's just very hard. It's very challenging because you're an outsider in a very small circle of trust, and you ain't in that circle of trust. So what we see time and time again are parasites who will come in and relieve you of all of that extra money that you have with the promise of being able to give you, the gift, the route to the promised land. Just be really careful. Surround yourself with great community, build up other great startup friends, have agreements that you'll swap investors when you feel that those investors are actually useful for the other companies. Don't burn any bridges if they're not. And then just build a support network, right? That's really going to help you.
Yeah, I mean, there's a lot of networks out there, whether it's accelerators like us or other groups that just do meetups and things like that can really help you out. I mean, I like our approach to things because as an accelerator, the investors usually know that we have some skin in the game in this. We know they know we've invested in some of these companies, and we work with them really closely, and so it gives us a bit of a trust with them.
Yeah.
But there's a lot of different resources out there. We have an investor we work with who's up in the Silicon Valley. He's a big investor who one of his friends introduced us to him. The guy's not an investor; he's just one of his friends that runs a startup. Introduced us to him, and now we have a great partnership with one of the biggest funds in the world now.
Yeah.
Just because some guy we met at a party one time introduced us there. So you never know who the right fit is going to be.
Parties and beer are good. I have to say, we haven't covered that properly yet. I could do a whole podcast on what we do, but it really, there's actually a really serious point. Like the best relationships, remember the investor whiskey tasting that we did? Mm-hmm. We built all these great friends. After we went through like the 4th or 5th bottle of whiskey, then suddenly everybody's best buddies. And it changes the dynamic. It moves the power ratio from investors really powerful, startups really weak, to just 2 guys or girls talking over a glass of whiskey and having a bit of fun.
Mm-hmm. And at the end of the day, it's all just people. I mean, you're just meeting somebody else, telling them what you do, and they either like it or they don't at the end of the day. I mean, There's just a lot of different ways to go about it, but I always love that approach. I mean, you always talk about meeting Asher in a bar one time and just getting some drinks with him, and now he's one of our most prolific investors in our companies here. So
one of the biggest investors and like a great friend of ours, and it's true. We were having a beer and some jerk was around us who didn't feel that either of us were important enough to speak to, and they happened to be right about me, but they were like miles off the mark with Asher. But that then created this bond of two people who'd been prejudiced against, who then became friends, and now he's invested in our companies. He continues to invest in our companies. Like, really important. You touched on accelerators. Can you just talk a little bit about, because again, we got people listening all over the world. So whether you're in Canada or Europe or China or anywhere else, the same system applies, where when you're an early stage startup, you need someone to give you your hand up, right? Maybe you're an exited entrepreneur, in which case it's easier. But assuming that you're not, you're either going to go for a lone angel, and you're going to try and find somebody who maybe really loves your space, they like your space, you get them, and they give you that boost up that you need. Are you going to come to someone like the dojo, and whether you end up coming into our accelerator where we'll put some money into your company, or whether you end up coming into one of our programs where we'll teach you and we'll train you and we'll connect you and we'll get you as part of the community so that you can then get access to the large investors. Like, there's a few other things out there. But can we just look at maybe some of the incubators, talk a little bit about like the Y Combinators and the 500 startups and the plug and plays, like, and then the multitude of other vehicles out there that people can get a little start on. What do you think of them, and how do they help startups in general?
And they're great for the whole community. I mean, and obviously people like Y Combinator and them are a little further along now. They take companies on who are at least seed round. So we're the ones who probably do really early stage companies. A lot of the ones we work with are pre-revenue. So we actually have worked with the bigger accelerators. In fact, that our companies, they get to are so early, they get to the point where they're actually ready for a company like that to even get involved with them. So we have people like, I mean, even like guys like Amplifier doing stuff like that too. So we can, who are a little further along. So
Y Combinator will take a couple of hundred companies through, they'll put them in a program, they'll train them, they'll work with them for about 12 weeks. Well, what I liked about Y Combinator, and this is the great thing about the space that we're in, is there's no competitors in this space. What happens within investment in this space is that the more successful you are in investment, the more you collaborate with other investors. The more investors want to all get involved so they can do something called syndication within startups. You take an Uber are worth whatever, 30, 40, $50 billion. Like, nobody minds that other people are making money. You actually, the whole reason why they increase in value is that everybody's making money as the investment value continues to rise in the company. So I love that Y Combinator, actually just going through Y Combinator, it increases the value of the company. And because they've had good success, the companies coming through them, I don't want to say they're guaranteed of subsequent funding, but most of them do get it.
Yeah, I mean, it makes it a lot easier for them. They have such great connections in places like that too, that they can really make that easier for the startups to get investment, because they have that badge of honor of being part of that accelerator, because they have such a good history in the past of making great companies. So,
and that's the key. So I think that's what we want people to look out for, right? When we say, in general, incubators, accelerators are good as long as they're not taking too much equity in your company, whether it's us or whether it's anyone else. However, check their track record. Now, there are certain ones like us where we started as a training company many years ago, and we just wanted to help engage and get startups connected. And then we started to get some traction, and people liked what we were doing. And some LPs came into Expert Dojo, and they said, hey, we want to invest money through Expert Dojo. So we added on the accelerator, we added on the venture studio. So on one level, we've only been doing that for a year or so. So you can't look at our track record and say, guys, you should have exited a lot of companies. But on the other side, hey, we've got one of our companies being acquired right now. So our track record is okay. But just look at the companies that have gone through the accelerator. If possible, speak to the companies that have gone through the accelerator, at least one or two. Look at the amount that you're getting. Look at the equity that you're going to give up. Try and see if you can gauge what those companies are actually doing after they leave the accelerator. And as I said, some will be like us. They haven't been around for a long time, but some will have been around for 10, 15 years. It's pretty easy to check.
Well, I mean, what tends to happen usually is the ones who don't do as well tend to fade away pretty quickly too.
Yeah.
So, I mean, you'll see that happen a lot too. So, I mean, if they're around for at least 5 or 6 years, it's usually a pretty good sign that they're doing something right and they've made a few good investments at least. And so you usually have a pretty good track record to tell by that. So.
Yeah, I like that. Other areas is within your industry. So, how many startups? And I'm thinking I'm thinking specifically of one or two that we have in the dojo here. But how many startups do you see that are specifically raising money from just people who have domain expertise? Like they're not angels, they're not venture capitalists, they're not incubators, accelerators. They're just people who have phenomenal domain expertise. There was one particular person who raised millions of dollars within the entertainment space continually without having exited startups before, but he was just a phenomenal salesperson, and because the people in his space really got it, they kept on investing money.
Yeah, and that happens all the time. Just people who have just great salespeople who know how to present their product, whether they have one that's really adequate or not. But that route was more non-traditional investors that person was finding. So
Totally.
they were finding like people in the entertainment industry who don't really know much about that space. So they thought, oh, well, this guy seems really legit. He seems like he knows what he's doing. So why not? Which you see happen all the time. If you're a good salesperson, it doesn't hurt you on your raising money side. But we get people who are geniuses who can barely speak, who have great products.
That's the thing, right? So what do?
I mean, it's just tough. I always like to find people to be a part of your team who are good at that. So we had one that we were working with who he wasn't from the U.S. He didn't really know how to communicate that well. So he brought on a salesperson who was great, knew how to communicate what he was doing, and made his presentations way better. And every time he had an investor meeting, brought that guy along so they could really communicate what they were doing. So, I mean, it's all about building a good team around you too. So if no one else believes in it, you got to find someone who does. Yeah. So there's always those people out there. So
I like that. Okay, so I want to finish us up a little bit here. And I want to finish us up specifically focusing on you're a startup, John. Right? You're no longer the head of investment at Expert Dojo. You are no longer the man who gets calls day, morning, noon, and night. I know you do. I see the copy emails where they're like, please, can you reach out to these investors? You are now a startup and you have 3 months runway. And you've got a business, you have a product, it's a website, maybe there's an app built in there as well. You've got it pretty much built, but after 3 months, you're going to run out of money. Tell our listeners, step by step, you're based here in LA, to keep it simple so we know where we are. Step by step, what are you going to do morning, day, and nighttime? And what are you looking to achieve, and what type of numbers are you looking at to measure yourself towards success?
First thing, I'm going to keep building the company, what I'm doing. So I'm not going to just stop and focus on the investment. You got to keep hustling with that. I mean, hustle's the big thing with this. You want to be out there doing things as much as possible. Build your product, meet people, connect with as many groups as you can. So you want to find as many connections. Start meeting people, telling everyone what your product is, and just communicate why it's going to change the world more than anything, too. Just find the right network and then really start expanding from there, because you're not going to raise money alone. You're going to have some help with it, whether it's a group of people, whether it's an accelerator or something like that. So just surrounding yourself with the right people is huge in the beginning, as long as you're building the company at the same time, which can be tough for people to do both because both of them are full-time jobs. But entrepreneurs signed up for multiple full-time jobs when they started the company. So
yeah. And how many people are you outreaching to every day? Are you allocating a certain amount of people to outreach to a day? I hear some people say that they have to outreach to 1,000 people to have 100 meetings to get 2 people who are going to invest.
Yeah, I mean, I don't necessarily agree with that. I think it's more quality than quantity. I like to reach out to 10 people who matter, who are gonna be interested in what I'm doing, more than 1,000 people who may be interested in it, but I don't really know for sure. I like doing my research and seeing who the best people are for my space, what I'm doing, and that they are going to love what I'm doing because they've done it before. They either know the space or they're in the space right now.
Okay, so you got me. I'm with you on that one. So you got your 10 people. How do you outreach them? You are no longer the head of investment at Expert Dojo where people will pick up the phone because you're John. You are now a normal man like me, and you're just asking somebody for money, and you know you've got 3 months before you die.
Well, before I knew a lot of these people, I was just asking people I knew for introduction. So I met an investor and say, hey, you know this person up here. Can you introduce me to them? I mean, I'm just trying to talk about my company with them. And then if you know them well enough, they'll get those introductions for you. So it's a lot of who you know already can introduce you to those people you don't know and open doors for you that aren't there. So that's a big part of it too, is just finding your
so
local
you're not
network.
even reaching out to them yet. You're firstly going to your network to find out who knows them. You're probably checking on LinkedIn to see who their second connections are, to see if they're people you know. You're then arranging to meet with those people to see how you can butter them up a little bit so that you can get a direct introduction to them.
Yeah, I still do that to
Fascinating.
this day. If I don't know somebody and I want to get in touch with them, I'll still call one of our buddies up and go, hey, I see you know them. Can you make an introduction to them? And it's always better because if you're friends with somebody, their chances are they'll do it for you. And if they're friends with that person as well, it's a really easy connection and they'll always talk to you.
I love it. So then you get your meetings, you reach out to your 10 people, you get meetings with 3. The other 7 will never, ever reply back to you. Just run out of time. What are you doing to prepare for those 3 meetings? Are you bringing, it's just you're a sole founder, but you think that may be a challenge if you're seen to be a very weak team. How are you preparing yourself to make sure that the meeting goes as well as it possibly can? And I mean everything, as far as where do you meet them? Do you meet them in a Starbucks? Do you go to an executive suite? Do you have it in their office? Do you control the conversation, and what do you bring with you?
I mean, if it's a VC, they'll have an office for the most part. I mean, I don't know many that don't have offices, so usually they want to do it at their place, or they'll do it for your office. So usually people have offices either in an executive suite or something like that.
But that's okay. Do it at their space is fine, right?
Yeah, it's fine. I mean, it doesn't matter where you do it, honestly. But I just want to I want to know the ins and outs of my company, my financials, all that stuff, what my user growth, where my projections are, what my goals are for the future now.
Oh, this is so good because there's so many people we see who give country numbers, right? They'll talk about what their projections are, but then that will clash with what they've said that they've already done.
Yeah.
And it just gets messy.
Yeah, and then just the projections that have no rhyme or reason to them. Like, we're going to be a $3 billion company next year. We can't tell you why, but that's going to happen.
How much are you going to do this year? Like $72,000?
Well, we've done about $10,000 this month. So, yeah. So, have your numbers accurate. I mean, not every investor needs to see that it's going to be a $30 billion company next year. They just want to see that you're on the right track to building something that could be big or could get them a good return on their investment, honestly. That's
they
all
want
really
truth and transparency.
Yeah.
Like we know most companies take 7 to 10 years to be able to achieve what they're going to achieve. So just don't do that. Don't be that person with that massive hockey stick just because you know that they expect to see it.
Yeah.
Okay, great. So I like that. You know your numbers inside out. Is there a way that you're going to present it? Are you going to present your business plan or your deck, or how would you go through the meeting?
I would usually do a deck, just something simple that shows what I'm doing right now, my projections and things like that.
Yeah, so top line first.
They usually expect decks. It's what most people do, so it's really easy.
Yeah. Any amount of pages? You like 20-page decks, 10-page decks?
I always like short things. I like things to be concise and really easy and straight to the point. For decks, that's usually a good thing too, because I can't tell you how many decks I've seen where they just go on for 25 pages, and by the 10th page, I'm just like, I don't even know what I'm doing now. Like you've said so many things. You really should be able to explain your product in just a few slides. It's usually not as difficult as you're making it. Some people are just too close to the project to really see that you can really simplify it. So get somebody out on the outside to see it and help make it concise, honestly.
I like it. So. And then when you're in the meeting, are you trying to close them on the spot?
No.
Why not?
Well, I mean, if it's the first meeting, then it's not going to happen.
Like Wolf of Wall Street type stuff, you know?
No, the real world.
I don't mean take loads of drugs before the meeting, but like just.
I mean,
but when you're there, is it like you got to close them on the phone, or why is that a problem?
No, the real world's not Shark Tank. They're not going to write checks for you on the spot, and that's it. And most of them, you can have really great meetings where it could lead to checks in the future like that. A first meeting is never going to be just here's the check. See ya when you build $1 million company. They'll want to do at least 2 or 3 meetings with a VC usually. An angel investor can be different. An angel investor can write you a check pretty quickly, but a VC is going to be at least 2 meetings, and they'll want to really love the product if it's going to go that fast even.
Yeah,
so,
but your point is more just don't put some kind of stupid fake. You have to close today. Are you going to lose the deal? Because we're startup. They know we're startup. Like if there's a strong reason for it. So for example, if you were one of our startups who I think are amazing, she has, and by the way, I say she a lot, 60% of all of the companies in our program are female founder-led companies. And we love female founder-led companies because they're extremely realistic on where they're going to go in the future. And normally they underscore what the potential is. Listen, we love male founders too, but as a bloke, as a guy, as a man, I can tell you sometimes we get a little bit carried away with our projections and what we feel we're going to do. And sometimes it's good to be a little bit grounded as well. But I always loved what she does, because she goes to the VCs and says, I have a problem. I'm growing my business too fast and I'm going to fall over my success if I don't raise investment. So it's not that you have to invest or your discount's going to expire, or you have to invest or I'm going to take away the deal tomorrow. It's that you have to invest because if you really want to support me as a startup, you want to help make sure that I'm successful by being able to stay up with everything that we've created, rather than let everything fall down and crash before you invest. Like, that's a real urgency, right?
Mm-hmm. Yeah, I mean, most VCs aren't going to write a check in at least 3 to 6 weeks usually.
Yeah.
So, I mean, they want to see that stuff's all in order. They'll look through all your numbers, make sure everything is in order as to what you said it was too. Because we see people who kind of expand on the numbers a little bit, make things sound better than they are, and that is not going to work with VCs. They'll make sure those numbers are perfectly fine, make sure everything's accurate, and that they're getting exactly what you told them they're getting.
Yeah. I like that. Okay, so I like that. We've got how we go in, how we put it together, and then I'm guessing, John, the follow-up. We know it's going to take 9 months is an average raise time. We've seen people go years, right? We've seen people go days. So it can be anywhere in the middle. But if we assume that in your case, we just have a 3-month period to make this whole thing and lock it down on, I'm guessing you're building everybody into a database system. You're creating a follow-up system for everyone. You're making sure that you're feeding back on what's happening within the company, you're feeding back on what's happening within the investment, and you're building these investors into a frenzy of wanting to be involved with something that's moving forward really fast.
Yeah, I mean, always keep everything logged in some capacity, whether it's a CRM like HubSpot, something like that. You could even use a Google Sheet if you need to. Just something really easy to keep track of what you're doing, who you're talking to, and who you've already spoken to. I mean, I can't stress enough how vital that is to everything you're doing. So make sure you have all your ducks in a row in that capacity.
I love that. Okay, good. So in summary, make sure that you're actively doing this. Allocate time to it. It's important. I mean, John is, I would say, of all of the people working in LA, there's maybe 5-10 people who are more engaged in working with investors on a daily basis. And I only say 5-10, not because I know them, because I don't. I'm just guessing there has to be somebody else who does the massive amount of work that he and his team do every single day in investors. So you've just had the privilege of the last 40 minutes getting inside the mind of the entire investment division in Expert Dojo and what we do. And I'll tell you, John says it to me all the time. Like, we position ourselves in a place where we say, look, a normal investment, whether it's a investment into a company or whether it's working within companies in the cohort, there's normally an expectation that 1 in 20 of those companies is going to make it. Our expectation is that 1 in 5 of those companies are going to make it. So we have really high expectations. So look, can you get investment without doing all of this? Yeah, you can get lucky. But what you're hearing today is the criteria that we put on having the highest conversion ratio of startups to getting investment of anywhere else I know, you know. And then look, the final thing I'm going to say is, I always want to recognize great things. I want to thank John, not just for everything he does for the startup community, because it's a big thing, but also everything he does for Expert Dojo, everything he does for me. We would not have anything from an investment side without all of the tireless work that John puts into this. And I believe that if we look forward 4 or 5 years in the future, people are going to look at him and what he's created here within the team as being a massive differentiator between early stage startup having no hope or having an opportunity to do great things. So thanks to you, mate.
Yeah. We're always trying to build success here too, so I'm always looking for new companies to get involved and find the next big company to get investment for. So always looking for new companies.
I love it. How can people contact you, John?
You can email me, just john@expertdojo.com. It's Jon, no H in my name.
Yeah. Your name is actually Jonathan. I just destroyed it, right?
Yeah, it's fine. John works too, yeah. John's my dad's name, so it's okay. It goes well. But yeah, just john@expertdojo.com. I'm pretty responsive with everything too, so yeah, if you have any questions about how to raise money, what you think you should do, feel free to email me and I can see if I can help you in any way I can.
All right, my friend, let's keep doing great things. And to all of you out there in podcast land, we will be back again next Tuesday at 10 o'clock.
Woo! Thanks for joining us. If you know any other entrepreneur equally ambitious as you, then share this podcast by paying it forward to other entrepreneurs who are building your own army. Now, as always, our website, expertdojo.com, is packed with information to help you grow your business, find investment, and train for victory. We also walk our talk and invest in startups every year in our Accelerator here in Silicon Beach. You can always reach out to me at brian@expertdojo.com, and I look forward to being back here again at our regular time next Tuesday, 10 a.m. with another of the world's top investors, helping you win the war against startup failure.